Good morning. It is February 22nd, 2021, Monday morning. It's 7:30, a little bit after 7:30 a.m. And we are starting the week off with a down Monday. The markets are once again trading lower. So we're looking at the NASDAQ Micro E-mini 15-minute chart as you can see, and we're opening down. We still have a couple hours to go before the market opens, but right now the futures are at rock bottom. This has been a pattern of recent. Still in the doldrums. So that's the NASDAQ. The S&P 500 is down. The Dow is down. And RTY, the Russell 2000 is down. So there you have it. And when the markets are down, my account is also down. And right now I've got 770 margin. Back into the 30s, 38,719. I'm not complaining. It could be a lot worse, but that's a nice little drop from where I was. I was at 44,500 early last week, and that's quite a bite out of my trading account. Wow, what a loss there. But that's what happens when the market goes down and you're long the market. I don't have a good explanation for why we're getting hit so hard this morning. I mean, we were down most of the week last week, and down again today. Now, the only thing I can guess might be impacted. I heard I heard a little bit on the radio, CNBC, a Squawk Box, some talk about, I guess, Summers maybe mentioning a need for rate hikes sooner rather than later, or I don't know, something to do with rate hikes. And but then someone else was saying, if anything, we need to keep rates low or drop. I think they're about as low as they can get. I think they're at zero now. But my guess is that they're going to keep the rates low. We have not even begun to recover from this pandemic. So I guess that we're going to stay low with the rates and continue the stimulus. The stimulus will be moved forward. And of course, I mentioned in the last video that perhaps there's some reality coming into the market where we had such a run up in 2020 despite the pandemic, and I again think that was mostly secondary to stimulus money, printing trillions of dollars, throwing that into the economy and into the stock market. That's that almost always results in the market going sky high, which it did during 2020, when you would have expected the market to be volatile with the pandemic and the shutdown of the economy. However, we may be at a point now where reality is setting in, and all the printed money is kind of built into the market, and now new concerns might be on the rise. And again, one big concern might be the strong possibility that there's going to be increase in tax rates, um, or elimination of some of the cuts from the last administration, particularly involving the businesses, um, who will end up being taxed at a higher rate. If you recall, when those tax cuts were implemented during the last administration, the market uh, went up for quite a while, and the businesses. I don't remember hearing about too many businesses uh, um, um, not blowing out their earnings report. Because basically the tax cuts just was an instant boost to their earnings. Uh, um, so a tax hike will be the opposite. So that's what I'm guessing is kind of causing this doldrum in the markets. Is these moves down, kind of merciless moves down, with weak rebounds, if any. Um, and the market can get you either way. It can crash and take the life out of you, or it can take you down with just many little tiny cuts. And that's kind of what it's doing to me right now. It's these little down days, one after the other, doesn't really give you much room to trade or and make moves in the market. Um, if you don't get a good rally, you don't have a chance to take something off the table. If you just keep going down, 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 a little bit more each day, your account just goes down with it if you're long the market. Uh, it's frustrating, but that's how the market is. It's very very hard to predict this market. Um, so I'm just gonna try to weather this out. If we just have just a series of more bad days, then I'll obviously have to back off my long positions and then ride it out with less number of contracts. But for right now, for today, I'm gonna try to ride this out. Hopefully, we'll get a turnaround, and maybe we'll get a little bull run at some point during the trading day. I'm not gonna panic though. I'm just gonna just hold what I have for today, and if the market really tanks, if it really shows some weakness that it's likely that will persist, then I may take a contract or two off just to keep from getting in a situation where if we have a series of big down days ahead, then I won't get a situation where they might raise the margin requirements on my account and then put me in a situation where I might get a margin call at some point. Right now, I'm not close to that, but the margin rates they will increase them kind of dramatically at times, and particularly in the after hours, the margin rates will go up, and then um, I've had contracts liquidated before. I do have some cash that I'm sitting on that I could move into my account. Um, I may do that in a day or two, depending on how things go. Well, for today, I'm just gonna ride it out. And like I said, this is my work week, so I won't be making videos on as regular basis this week. But when I get the opportunity to, I will share what's going on with my personal account. That's all I have for today. Happy trading.